Hey everybody, this is Jim at SP500chart.com. It's about 4:30 on January 7th, 2013. Let me read this to you, then we'll take a look. www.sp500chart.com and this video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I control lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Well, once again, we see the markets giving us surprise to the upside. I was not expecting a break to the upside over this trend line quite yet. And I'll tell you why. The reason is I was seeing, as we discussed yesterday, this symmetrical triangle pattern, which here's the top line, here's the bottom line. This pattern, let's go ahead and extend these lines just to make it a little interesting what we saw today. You'll see why I'm doing this in just a second. But was not expecting a move up out of this pattern yet because we had not yet reached the minimum expected target of about 1820 from the breakdown of this symmetrical triangle. Of course, if any of this is right, and let's be frank, all of it may be wrong. Okay? Usually it's right, but it's not always right. But if this is the correct read on what took place during these 2 days, the second and third, we should be seeing 1820. But we identified a larger pattern yesterday when we had a little bit more data in, and that is the potential of this descending wedge. And in yesterday's video I mentioned that if we break this top line, then that should be our signal that the selling and weakness is about to end. That doesn't mean you break that line and then go straight up, okay? As a matter of fact, we could backtest this line and in so doing get down to 1820. That's not out of the question. So I would not be surprised to see that happen. But the break of this line still means I think the selling is over. It's just that it doesn't mean it's going to be immediately over. Get over the line, snap your fingers, we now go straight up. Oftentimes you break a resistance line and then you break out of it and then you come back down and back test it. That's still a very distinct possibility. But I'm going to throw another line up here to make this a bit more of a bird's nest. And I bet you know what color this line is going to end up being. You are correct. Because, just like we've seen so many times in the past, when we've had a break of a trend, we have, instead of getting a serious downside from it, oftentimes we have made a little inverted head and shoulders pattern. You're probably getting tired of seeing these. And if this one is an inverted head and shoulders pattern, guess what? This is really shocking. It's got a right shoulder. Is it a head and shoulders pattern, an inverted head and shoulders pattern yet? No, it is not, because it has not gotten out over this proposed neckline. Now, if we get over this neckline, and this does end up being an inverted head and shoulders pattern, we can measure our target by measuring the depth of the head, looking at where it might break out, and surprise, if this is an inverted head and shoulders pattern and it is confirmed by a breakout, then we would be looking at a minimum target from this pattern of at least 1850 56. So that would mean if this, and I say it's if because it hasn't happened yet, but if this ends up being such a pattern, and if it is confirmed by a breakout, then we would be looking for a new all-time high in the S&P with a target, like I said, of roughly 1856. It'll be interesting to see if that happens, because we will have that would put us right up at resistance again from this brown line that we talked about as being a fairly in the scheme of things that we're looking at here lately. This line has a little bit more of a history to it, and it goes back a little bit further than many of the other trend lines that we've been examining lately. This is that line right here, and it goes back to about the middle of September, and we've got 1, 2, 3, 4, pretty much 5, not exactly 5. We may be lining up for another tag on this line. So guys, let's do this going into tomorrow to see if this stuff works. Let's see, is this line going to break? And if it does, will we see a powerful, fairly powerful move, likely up to about 1856? Or will this serve as resistance and send us back down for a potential back test? And also, remember, we still have, from our triangle target, our triangle pattern right here, we still have this target area of about 1820. So, all that to say, if we do come down to 1820, or to tag this red line that I've just highlighted, I would expect support there. If we break out over this neckline, then I would expect, then we would have a legitimate technical analysis reason to expect and to look for a move to about 1856. So, I guess the name of the game here, oh by the way, I was going to tell you when I extended these lines. I extended those because if we look at where the apex of this triangle pattern is, and I'll use a horizontal line tool to do that, that apex is almost exactly where we came down to this afternoon, noodled around for a bit, and then bounced pretty strongly off of that. If you're looking at a really, really short-term chart, and maybe you're a day trader, you might say that getting over this little line right here also is a bullish sign on a 1 or 2 minute chart. I'm not really that concerned about the 1 and 2 minute chart, but you can see that these two peaks right here, that very short-term resistance was taken out later in the day, but again, albeit by a very small margin. So let's get rid of that. We'll get rid of this. Just wanted to show you that this low was at the apex of what was taking place back on the 2nd and the 3rd. So going forward, let's see if we break this. If we break this, it would probably happen either tomorrow or maybe very early on the 9th, probably tomorrow. And if we do, let's see if we end up over 1855 into that 1856, 1857 area. That's the bullish case. The other bullish case, because I think whether we go up to 1856, 57 by breaking this neckline, or we come down and make our minimum target by back testing this red line, either one of those still preserves the overall bullish picture. So, guys, there's your video for January 7th, 2014. Appreciate you taking time out of your day to watch this. Thank you for your support.